Week 5 is here. You are listening to the StockInvest.us podcast, Trading Tips with Jim. And yes, I'm Jim. And for the next 36 minutes, I will guide you through what I think will happen this week as tons of quarter results will come out. Fed will talk on Wednesday, give you the interest rates, and you may be happy with 0.25, but be more aware about what Powell says about the future. Will it remain hawkish? Because if it's hawkish, that means more downturn is coming. Markets are super overbought. I haven't seen Nasdaq this overbought in a long time. 82 on the relative strength index for Nasdaq right now. As I say, I cannot remember. We have to go back to the beginning of those strong falls when market was that high on the relative strength index. Does that mean we are in for a brutal fall this week? Well, you just have to listen to the podcast because I will tell you exactly what I think. I'm just saying overbought, extremely overbought in the market as is. Trading tips, Meta up 31%, almost 32% in Meta. Will it continue? What about other trading tips? Well, you just have to stay tuned. You have 36 minutes to listen. I will tell you exactly what I think. You will have the trading tips at the end. But first, the market section. A new week is here, and this time it's week 5 and the end of January. Last week I told you markets were totally overbought and usually you either will have a strong reaction down or a rally. My bet after some arguing was that the markets would go down, and as I told you in the trading tips part, which is at the end of this podcast, I went a little defensive. But markets went into a rally. Nasdaq was up 4.33% last week, ending at 11,622 points. Dow Jones had a good week as well, up 603 points for Dow Jones, ending the week at 33,978 points, up 1.8%. So I was wrong betting on a red week. And as you will hear when we get to the trading tips, of course, the trading tip portfolio didn't take out the potential of the week. It did very well because Meta, which we bought in week 51, had a super strong week, up more than 30% so far in the portfolio, but some of the others did not have the same upturn. Anyway, it's a new week ahead of us, and this week will be full of quarter results. At the same time, as I will tell you very shortly, if we were overbought last week, we are even more overbought now. Tons of quarter results coming. All the big companies are coming this week. They will come one after the other, before opening, after opening, during the week. And all of them have the potential to drag the markets down. You have to make sure that you know when your stock or stocks, if you have several, have their quarter results, because usually you see a reaction around the date, either positive or negative, and you do not want to be caught by surprise. Here are some key takeaways from what I think that you will see in all the quarter results. They will have one thing in common, because we already started to see this and now it will just continue. The quarter results may be somewhat okay, but look at the statements, what the CEOs are writing. Most of them will tell that there are very huge challenges ahead in returns of the high inflation, in returns of keeping the profit. And that is more important because it's a signaling of what to expect for the future quarter results. And if a profit is threatened, well, you can expect dividends to go down. Now more than ever, if you are a dividend player, you have to check your stocks and the stock's ability to continue to pay dividends, because many of the companies for sure will start cut in their dividends as profit go down. And let's just dwell a little bit about this, because this gives expectation for the full of February. Quick recap, if you are a new listener to this podcast, I give it every single Monday. Been doing this is the 4th year in a row where I tell you exactly what I think will happen. And so far, of course, I miss now and then on a week. I say it will be a red week in my opinion. It turns out a green week, but in general, I'm able to keep the long trends and being very correct about the war, the inflation, about how markets will move. And as I told you in the first podcast of this year, I think personally that the bear market, because we still are in a bear market despite January being very good, the end of the bear market will be this year. My guess it will be May. It will turn somewhere in May, and that we are finally out of the bear market, totally concluded by June. The reason why I think that the last upturn is not sustainable is because of the things that I'm just saying, the expectation for the quarter results and even more interest rates. On Wednesday, Powell will give a speech, and at 2 o'clock you will have the interest rates decision. For those remembering 2022, some of these days where he were giving his speech, there were awful market reactions. Now we are in the situations where the market, based on technical signals, are totally overbought, just waiting for a natural reaction down. It just needs a trigger to scare the market. Will it be Wednesday and Powell who will scare the market? Everyone expects Powell to increase the interest rates by 0.25%. So I don't think there will be any big surprises in the increase of the interest rates. More important is what he will say about the future. Will he remain hawkish, saying that we expect to increase interest rates more and longer than before? That will have a huge toll on market. You will see money flow out of stock market and into interest rates and more secure bonds. It's just how the markets work. That was exactly what happened last year when I told you 2-3 years ago that the interest rates will start to rally upwards and go much higher than people think. Happened last year, week after month after month. Powell was out increasing the interest rates and the market just kept falling and falling. Now it's not so much about the increase itself, but more about what he says. The reason why I think he will be hawkish is the following. Inflation, which was up at 8%, has cooled a little bit. Most of the reason for this is because oil, who was traded at $120 when inflation hit the peak, has fell to around $80. That huge fall, and oil being such a huge part of inflation, the energy cost, made for the fall that we see in the monthly inflation and also the 12-month over 12 months. Now, at the same thing, two things are happening. Wages are going up at insane fast pace in US. And usually we like that. We like wages go up because it gives more back to the worker. But when the inflation is as high as it is, the real inflation, when we take away some of the other things and we look at what people actually buy, the buying power is going down. But the increase in wages also makes sure that people remain in buying power, mean that there will be pressure on the inflation also from the buying power. And that will force Powell to take down the buying power, because the only way to fight inflation is taking down the general buying power to increase the interest rates. At the same time, I told you, I believe oil will continue up, currently trading at $79. I think oil will just continue upwards. It's my bet. And if this happens, China is opening up after finally lifting all their COVID restrictions. China is finally moving up. Some countries, oil-producing countries, are reporting low stockpilage of oil. So I think there is fair reason to believe that oil will go up. If oil go up and wages just continues to go up as they do, inflation will not go down, it will remain high, and Powell will increase interest rates. So speaking about this long-term thing, I think that the cure still has to be at place, meaning that the interest rates will go up. That is my argument why we are fundamentally heading for more downturn in the market. All of you who has enjoyed January, 4 strong weeks, and some of the stocks are up 50-70%, just like I told you, when the market bounces up, you will have these reactions up. May disagree and say that no, now we are heading for an upturn. I also hope that we are finally finished with everything. I'm just telling you what to expect. Job numbers will come in on Friday. January job numbers along with the weekly job numbers. And anyone following the news knows that the tech companies have been laying off people in very fast pace. Now the report results will tell the same as these big companies come in. They will tell the same thing like the tech sector did. We expect profit to go down. We need to cut costs. We need to cut amount of people. So I expect from all the quarter results to say more or less the same, expecting worse economy in general, and that the price will be layoff of people. So I cannot see how job numbers can remain strong. They have been, I expected the falls to start in November, that you would see strong falls from November. We are now in the end of January. Still, unemployment rate stays somewhat okay. But in my opinion, it just have to increase. And of course, for anyone who are employed, I hope I'm wrong, but I'm just saying that based on everything, you can expect unemployment rate to go up. All of these things in general should put a toll on the market. The market will turn long before the fundamentals do, in the stock market, I mean, in general. But that is how it is. Gold, you know, I love gold, and I told you I'm into gold myself, and very bullish to gold. Gold was up $10 last week to 1,938, and I think, and I'll just repeat it, I think gold will go to $2,500. I think we will continue to see money move into gold as a secure item. 10-year Treasury yield went up last week. Every time it goes up, markets will go down. So that speaks for a week. We'll now just have a quick look at the technical side of things. What do the technical sides say? Are they bullish or bearish? And I will come to a conclusion for the week ahead of us. Now, let's wrap up the things I said. In general, the fundamental picture is like this. There will be tons of quarter results coming this week. Some of these are from the absolutely major companies, and all of them has the ability to move the market itself. They are so big, like Google, etc., that they can move the general market. I expect quarter results to decline across the big board. Some, of course, will do good, but the major news will be negative compared to last quarters. We will have Fed on Wednesday, job numbers on Friday. In addition to this, we see that the Ukraine conflicts are showing signs of escalation. Last week, for those who has followed me for a very long time knows that I'm expecting the Taiwan conflict to come up this year, like I had Ukraine last year. I expect Taiwan to come up this year. I saw a short news from a 4-star general in the United States saying that he thinks that it will be within the next 2 years that there will be a war with China over Taiwan. Hopefully these things will not happen. I'm just saying that there is a fair chance that these things may come out, that they suddenly start to escalate. And if we have global things like this, that will, of course, hold the market down. Things may happen in Ukraine again because of the influx of weapons from the West. It might cause Russia to do irrational things. So pay attention to the news. As always, you have to pay attention to the news. Now, what are the technical things saying? At StockInvest, we analyze more than 38,000 tickers. Some 26,000 of these are qualified for analysis. We give them a buy, sell, or a hold ranking. If the buy numbers get too high, you can expect a correction down, because usually there is a balance in these numbers. In a bear market, the sell numbers will usually be higher than the buy, of course, and in a bull market, the buys in general stays higher than in a bear market. But when one of these, it's like the relative strength index, when one of these numbers, like the buy number, is getting way too high, you can expect a correction down. Across all the tickers that we analyze, 41% holds buy signals, and as I told you last week, whenever the number is this high, there will be an overall reaction down in the market. It has happened every single time I mentioned this number. Didn't happen last week. We'll see if it will happen this week. Now, if you go to Nasdaq, 46% buy signals. Again, I have seen Nasdaq up at 50 before having a correction down, so it might be that there still is more left in the rocket pushing the stocks harder up, because at this, when things are this high, they can do like Tesla. Tesla was overbought already on Wednesday and then just go into a frantic rally, and we saw Tesla pushing all the way up to some $180+ dollars. So this may very well happen, but when numbers are this high, you can expect a correction anytime. New York Stock Exchange, 51% buy signal. That has remained strong, but last week was even stronger. That is why some of the major stocks had a small fall last week. Oil was one of these. London, 42% buy signals, up from last week where it was 39%, and Tokyo up from 34 to 41. Shenzhen, China remains high at 55% buy signals. Right now, every market is euphoric, super happy, everyone is trading, stocks are moving up at a strong pace. Numbers are saying that this will turn anytime soon. To conclude, I will have a look at the chart like we always do, and just give you my opinion for the weekend was. But as I told you, this is typically where markets turn. Now the chart, I will look at the chart at StockInvest.us. You can type in the ticker and you will see the same thing like I see. As usual, I'll try to explain for those of you listening on audio only. What we see is Nasdaq moving in a horizontal trend. Now it is at the absolutely top of the trend. Overbought 84% on relative strength index on Thursday, ending Friday at 82, and it is as overbought as it has been in a long time. Every time you get into this interval, there will be a correction down. The question is how much it will be. Here is the good news: there is plenty of support below. So we can have a natural reaction down to 11,400, relative strength index move down to 60, then just continue upwards. This is fairly likely. It's not unlikely. Everything says that there will be a reaction down. The question is, again, how big it will be. Support starting at 11,500, 11,400, and very strong support anywhere all the way down to 10,400. So there is so much support that there is a fair chance that the market just will have a natural reaction down. And what we wanted, what I told you over and over again, we have the natural reaction down, but markets turn in the middle of the trend, because if it turns in the middle of the trend, that gives that opportunity to finally break the trend. So if Nasdaq corrects down to 11,000, turn up again, we might have that very first chance of a break of the trend. And that will be the break that will signal the end of the bear market and the first strong. So there is a huge chance. Let's hope for it. But everything in this chart tells me that there will be a reaction down. There's a buy signals from the short-term moving average. There's a buy signals from the long-term moving average. There's a buy signals from the relation between the two moving averages. But as I told you, being this overbought means for a reaction down. I thought it would be a red week last week. I believe it will be a red week this week with a natural correction down. The question is how strong it will be. Now, what I'm doing is also checking the long chart. And again, here you see the same thing, even in the long-term chart. Nasdaq is totally overbought. Every time the index been this high, you had huge reaction down. Happened in May last year, topping at 14,000, then falling all the way down to 11,000. And in September, it topped at 12,000, fell all the way to 10,000. Now it is again overbought, strongly overbought in the relative strength index, and you can expect a reaction down. But the very positive thing again here is that there is a buy signals between the relation between the long and the short term moving average, and it's the first time in years actually that we see this buy signal. So that is super strong. Everything is just indicating a natural reaction down maybe this week, but there are strong signs in the chart that we might be heading upwards. This you may feel, oh, this contradicts what I said, that usually a bear market is ended all the previous falls, 2000, 2008, etc., 97 also. They end with 3 dreadful falls before the market finally falls. These are historical ways bear market ended. Doesn't mean that it has to happen, it's just how it usually do. From a chart point of view, everything in this chart indicates a fair chance that Nasdaq may be turning now. As I said many weeks ago, being at 10,200 points 3 times in a row, bouncing up every time, is a good thing. Now we will just see what will be the final result. The chart is just saying that it's a fair chance, it's in the top of the trend. Reaction down has to come, but it may just be a short one before it pushes up and we will have a final break of the huge falling trend. Many good things in the chart giving possible good upside. So we will see what will be the thing. Are we finally done, or is there more falls ahead? For week ahead, I believe in red markets. Sadly, I also believe that the general tendency will push the market down. But it's some of the best news I had. In fact, I believe in more than a year. It's the first time I see charts being this strong. So many positive signals, despite me being a little bit negative there. Many positive things is here, and we are for sure getting close to the time where things finally will turn. And if we made good money last year, we will make even more money this year. We will head to the trading tips where you will hear what I will do this week, and of course you will hear how last week went. Coming up, trading tips. We are at the trading tips section, and again, I will have to disappoint you because I do not plan to be very aggressive this week. Last week, we had 4 stocks in the portfolio. We had Sumerica, Meta, Occidental and Fate. And I told you, if I was you, I would hunt for stocks last week with low relative strength index, good support below. I'm very happy to see that many of the stocks that were on that exactly list had such a strong week last week. Very good indeed. Very happy about the tips to pick up on Tesla a few weeks ago. Also turned out very, very strongly. But let's move through the tickers that are in the portfolio if you're a new listener. So I've been doing this podcast it's the 4th year already. Every week, Monday before markets open, I will give you the podcast telling you what I think about the week ahead of us. Give you some big lines what I think will happen forward, and very often some tips and tricks how to do trading during the week or in general. Last few podcasts I haven't told you many new things. Last year we focused a lot on stop loss, and maybe some of you recognize that I haven't been talking too much about stop loss lately, and that is exactly because we have had this strong upturn in the markets. We were very close to the bottom, 10,002 at Nasdaq, etc. And then my focus was not so much on stop loss, because when markets were falling, I was expecting markets to fall and fall. The one thing that I wanted to help you was reducing your losses, because there is two philosophies we follow in this podcast, and what StockInvest is built on is reduce your losses, increase your gains. If you're able to do this, we should be profitable in our trading. And this entire trading tips portfolio is based on these principles. But we weight things as we see markets move. So we go a little more risky trades when we see the possible upturn in the market, and a little bit more defensive when we see possible downside in the market. So last year I focused on lots and lots of stop loss. Use stop loss. That was mainly hoping that some of you would pick up on these things, because you so often get fooled. You are in an upturn and then you get into a downturn and you just lose all your profit and even more. So not speaking so much about stop loss had a reason, but this week again will warn you, try to use stop loss. Get back on the track if you slightly forgot about it. Trailing stop loss is the perfect one. Just follows the stock, never down. You can go to the blog StockInvest.us and read more about stop losses. So I will not repeat too much of it. You also heard me say that I think markets have a fair chance of an upturn, that we are close to something. Chart says it. I believe it will be May, but it may already be. And that means that we will focus more on the upside and how we can do this. This we will do a little bit more by, in general, increasing the risk. I will not argue for risk this week, but in general, we will go for stocks that on the paper in the chart has a potential upside. One of the things that I really like to look at is those stocks who have little resistance above, as little as possible, because that makes for stronger move. Happened in Tesla. Tesla was falling way too fast. The reaction up was spot on, and very, very soon you will hear me say that I think the rally is over in Meta. I told you that last week. Meta is now at 150, that top target I saw for Meta in short term. So more than ever, we will focus on stocks that can rally quite much upwards. That is how we will hunt that strong upside. At the same time, we will make sure to have the stop losses. Now back to the stocks in the portfolio. Sumerical, which we bought in week 34 as a penny stock without any stop loss. The only stock that we haven't bought, that we have bought without stop loss. Bought it at 26 cents. Didn't manage any. It was an upturn a few weeks after we bought it, week 34 last year, but then just fell and haven't done very good. Last week was back in green, But over last week it fell a little bit, ending the week at 25.8 cents. Currently down 2.64% in the portfolio. But I think now Sumerica will start to move. Got a strong feeling. So Sumerica remains a tip you should use because it's a penny stock. You should only have it as one of your risk stocks. But I believe Sumerica can do very strongly ahead, go into some sort of rally, do a double on the money. Even in red markets, I think Sumerica can do good. Sumerica stays in the portfolio, and I will tell you when I think it will be sold, but I have that strong feeling it will rally to $1. I want to be there. We've been there many times before in Sumerica, making strong money, and I think it will happen again. We just have to be patient. Now, Meta we bought in week 51 at $115. That was the third Meta trade, I think, because we was in at 94, later at 96. So we made money every single time we traded Meta. Strong profits in Meta. And this time, last time we bought week 51, $115, currently trading $151.74, up 31.62%. 31.62%. So the Meta trade turned out to be fantastic. It hasn't been able to be sold by stop loss. Trailing stop loss is falling exactly like it should. I thought it would be sold last week, but market did the opposite. It went into the rally, which was a chance, and Meta did as well. If I thought it would be sold last week by stop loss, I really think it will be sold this week. And like I said last week, and I'll repeat that, you may ask, why don't you sell Meta then? You have 151 and 31% profit. Why don't you sell? Argue is the same like last week, because I really do not know. The trailing stop loss will make sure that because that may very well happen that Meta just continue. Who can say for sure that Meta will not go to $170 this week? May very well happen. I think it will be a red week because everything is ready to correct down. But when markets are this overbought, they can just continue. I've seen that over and over again. Market find any reason to continue to push, it will push. If it happens, I will be on the journey. If Meta turns around, trailing stop loss will cut it by 5%. I will lose 5%. Yes, I will, from the top price. But it will still be an insane profit. That is why I use trailing stop loss. That is why we let the stocks run, because you cannot say 100% sure that now it will correct. Everything inside me says that Meta will correct down, but I cannot be sure. We play it safe, and why not? If Meta rally, more profits will be made. Then in week 1 we bought Fate and Oxy. I have to explain because, again, if you're a new listener, you're watching this on YouTube and you see this huge loss in Fate, minus 41%, you may think, oh, whoa, that's not good. What kind of trader is that? Here is what happened in Fate. We bought Fate in week 1 at 10.05. It continued up on Tuesday, even Wednesday, I think. But on some day in the week, Thursday, whatever it was, Fate issued a contract. A news contract with Johnson. Johnson was breached, stopped, cancelled, and Fate opened the day after down 60%. So that stop loss was never triggered simply because the stock opened much more down than where the stop loss was. As I told you then, the stock was 425. I thought there would be an upside in Fate. I even recommended you to get into Fate because you should then normally have that 1/3 or 2/3 upturn after such a huge fall. We were hunting for $6. Fate are currently trading at $5.92, so it has recovered some. I think it will recover more. I've studied the chart. I think that we can gain back more of the losses. And you simply see the results because this is exactly how it is. Go to podcast week 1 and you can hear more about the results last year, week by week. Fate is still the biggest single loss in this trading tips portfolio ever, but I think we can reduce the losses more. But Fate will be a loss, I'm pretty sure of that. But I want to reduce it as little as possible, and I see the upside in Fate compared to other stocks. I see the potential for more upside. That is why it still stays. We bought Oxy $60.40, but last week Oxy, after hitting 67.71 high, started to fall, fell 5%, was cut by stop loss. Oxy's out of the portfolio at 64.32. leaving 6.49% profit since we bought it. As I told you, I think it will be a red week. Now there is only 3 stocks left in the portfolio. I do shortings as well, but we are not doing shorting in this trading tip portfolio because that is extremely risky. I have many other stocks and portfolios in general, but this is the trading tips portfolio. 3 stocks in the portfolio: Sumerica, Fate, and Meta. To be honest, I'm not very happy about the combination, but it is what it is. As I told you, we will not increase more. I believe there will be a red week. I do not want to get overexposure. As you know, I still have most of the money in the bank. I'm just waiting for the time where I think will be the perfect time for buying more. And as I told you, EVs, I'm slowly picking more EV stocks in general because I see the huge upside. If we get that fall, which I'm expecting, I will pick even more. Sorry, I couldn't give you more stocks. You may feel let down because you wanted to pick some stock that may move good this week. I think Sumerica will move good this week. I think Mullen, for instance, will move good week. Have a good week. I'm very happy. Was it last week or the week before? I told you that I think Mullen again will have that same reaction up from 0.03 to 0.40, and that exactly happened. So those following that tip had a nice 30-40% profit. I think Mullen will continue upwards, but we will not buy it yet. I will keep a low profile, 3 stocks in the portfolio. That is how we will play this week. I personally think Meta will be sold. I hope to see Sumerica compensate for Fate, more uncertain, but I don't expect very much from the portfolio this week. Now, and let's end this podcast with this. You want to trade, you are eager, you want to trade, you wonder what stock should I look for. Again, I will repeat what I said last week. Go, for instance, to StockInvest.us, look at the RSI list, go for low relative strength index, and this time I will not go for 14, but 21. Use relative strength index 21. Find stocks with good, strong liquidity. Look at the chart. Look and see about the support below. This is very, very important. Do they have the support below? Do they show the sign of moving up? And is there little resistance above? You can see resistance as gray accumulated volume on the right hand side of the bar. You see some bars on the right hand side of the chart. And you want these to be little. When they are very long, that will be your resistance level, and you can try to calculate how much potential upside there is. Because if anything happened this week, I think it will be a red week. But I think some of these stocks who didn't go much last week will pick up speed, like afterburners, and they will have somewhat strong week as well. So there is your weekly pick. Other than that, I think oil is the right place to be. I think gold stocks is the right place to be. And of course, defense industry is the right stock. All of these 3 industries, I think, will hold very, very good if the markets go down, and continue to pick at slow pace EV shares. Build up a slightly small portfolio of EV shares, because when and if maybe the market already turned, as I said. EV is growth stocks, and some of these stocks, I'm not exactly sure which one, but they will have an upturn. You almost double the money in Tesla if you follow the Tesla tip, and there will be more in NIO, XPEV, etc. That is the end of this week's podcast. I will be back next week, hopefully with some more trading tips, and I can promise you we are slowly getting more into the aggressive move. We did so good 2022. So far this year we have done not more than average, but I'm also happy with that. And if we play our cards right, 2023 will be double as good as 2022. Until next week, I hope you will have a very nice week. I hope you will enjoy it. Here in Vilnius is snowing, expecting to snow all week. We are a few countries away from Ukraine, and you cannot imagine the strong support Ukraine have among the population down there. Very nice to see how people can get together and do good things. And I recommend that as well to you. Maybe if not want to support political things, there is many good things you can do to help others. And I hope this podcast help you a little bit in your trading. And again, have a super week, and we will speak in just a week. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information